everyone! Welcome to this time scrolling finance. Well, last week was quite unstable for the China's bonds market. Fundamentals hasn't changed much, but pressure comes from the liquidity. National Day vacation begins from next Wednesday and lasts to 7 days later. Different agency investors show different attitudes to the bonds market. So, as always, let's have a quick review of the bonds market, then check out details part. Alright? Total bond yields curve was upward and flatter than the week before. Yields of 3, 5, and 30 years terms went up 3, 0.5, and 2 basis points. 10 years term went down 0.2 basis points. If we compare to the one of December 9th last year, the curve kept twisted. Yields of 3, 5, and 30 years terms went up 16, 4, and 10 basis points. Yields of 10 years term went down 4 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds enlarged a lot, with 3-year spread was 63 basis points. About actions of investment agencies in last week for short and middle-term bonds, big banks and policy banks bought 90 billion yuan together. City commercial banks and securities companies sold 84 billion yuan together. And for long and ultra-long-term bonds, insurers bought 34 billion yuan, whereas funds sold 51 billion yuan. Next, let's check out details part and see what happened last week. In terms of fundamentals, well, nothing really happened. China's stocks market stayed strong and made the bonds market less attractive. Besides, the SCRO held a press conference to brief the achievements in high-quality development in the 14th five-year plan period. Let's say it was a conclusion kind of meeting and it didn't involve publishing new policies. So it didn't influence the bonds market much, but it encouraged the adventurous emotion in the capital market. Plus a 7-day National Day vacation coming soon, and it will definitely stimulate the consumption. The optimistic sentiments may last to at least October. So, from long and ultra-long-term view, let's just leave it alone. The fluctuation of long and ultra-long-term bonds is so bad that it causes every investor to lose money easily. And the fundamentals now is pretty obscure, we'd better avoid this unstable area. For funding conditions, well, this is the interesting part. The financing started to cross from third quarter to fourth quarter this week. Usually, the PBOC will invest some liquidity in the interbank market to stabilize the funding conditions. But last week, the PBOC didn't show her generosity as always. Just did some 14 days reverse repurchase operations on Monday and Friday, so the total volume of liquidity wasn't that enough in the market. The financing price for non-banking financial agencies was around 1.8% to cross the quarter. So from short and middle term view, now funding condition isn't that optimistic and we don't know whether the PBOC treats the bonds market good. So let's be careful and limit our DV1, don't buy too many short and middle term bonds. What should we pay attention next? First must be the actions of the PBOC, to see if it will do more 14 days reverse repurchase operations to loosen funding conditions. Second, the consumption willingness during the holiday, including the tourism data. Third, new policies may come out to enhance the economic recovery. About the bond investment strategies, considering we are close to the National Day vacation and the prospect of the economy and China's bonds market aren't that clear, so we'd better keep the strategy as usual and make informed decisions when we're back from the happy holiday. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. And next week will be the National Day holiday and I need some rest as well, so I'm gonna take a break next week and restart to post the videos on October 14th. Anyway, I will always be here, share my understanding and experience and waiting for you. So bye guys, until next time.